Thank you everyone for taking the time this evening to attend this webinar hosted by Kristal.AI. Throughout the webinar, we encourage you to use the Q&A tool to ask any questions that you might have for the panelists. This will make the discussion more engaging and keep us from switching to TikTok or Netflix. So I will help direct your questions to the respective panelists. We will try to address all your questions, but if we're unable to do so due to time constraint, you can email all of your questions to support@Kristal.AI. Lastly, this webinar will be recorded and posted on our YouTube channel. So, Kristal is at the intersection of finance and technology, but it is not alone in the journey. And so we're very excited and privileged to invite individuals from different areas in the finance space to share their insights on the topic of how will technology shape the future of finance. The panelists for today include Kenneth Lou, co-founder at Seedly, Arvin Singh, co-founder at Hula, Daniel Khoo, vice president at Asia Private Equity Club at SMU, and Swapnil Mishra, our head of private wealth at Kristal.AI. I may not do justice if I try to introduce them, so I will request them to introduce themselves and tell us a little about their company. We will start with Daniel, since the idea of the webinar originated from a discussion with the SMU Investor Club that he represents. Daniel, would you like to start?
Okay, Ken. Hi everyone, I'm Daniel Khoo. I'm a year 3 business student from SMU. And today I'll be representing Asia Private Equity Club at SMU. So actually, this is a club where we impart private equity and venture capital knowledge to our members to better prepare them for the work environment. And yeah, I'll pass my time to the next panelist.
Thank you, Daniel. Kenneth, would you like to go next? I'm sure many of our audience today already have left a review on Seedly or have heard about it, but yes.
Yeah, thank you so much. I really appreciate that. Nice to meet everyone. My name is Kenneth. I'm one of the co-founders here at Seedly. We are basically one of Singapore's largest personal finance community. And what we strive to do is to help people make smarter financial decisions on a personal level. And yeah, I mean, we work closely with companies like Kristal.AI, Hula soon, and many more to help them reach more customers and brand better in the online space. Thankful and happy to be here.
Thank you, Kenneth, for the wonderful introduction. Next, let's have Arvin to introduce, how he plays a role in Hula in empowering people to spend responsibly.
Excellent, thank you. My name is Arvin. I'm co-founder, chief operating officer at Hula, buy now, pay later solution provider here in Singapore. So we help you get your favorite products, and instead of being hit with the full price up front, you get to spread that out into 3 interest-free, fee-free installments instead. So just making it easier for folks to get the items that they want in a responsible manner, which I can definitely go into the details of how we keep it responsible as well. Thanks.
Thank you, Arvin, for the introduction. So lastly, Swapnil, would you like to introduce Kristal and your role in it?
Thank you. And thank you so much for everyone who's joined. Yeah, my name is Swapnil, and I'm the head of private wealth. That's a business I run, and in Kristal.AI. Kristal is a digital first wealth management platform covering and helping clients manage their savings, investments across retail investors, accredited investors, anybody who's looking to get started with their investment journey, or somebody who's looking for a lot more sophisticated solutions for investments. We kind of attempt to use technology to provide that access to investors across the board.
Thank you, Swapnil, for the introduction. So as we already know, technology is becoming increasingly important today, and its relevance is expected to stay for the long term. The onset of COVID-19 has also accelerated and reinforced the need for digital services, especially as we transition into a new post-pandemic normal. And finance, well, money has been around for a long time, and it is a medium of exchange and a store of value. In the world of finance is like a medium of communication. And the world of finance is not immune to the wave of technology. So let's start with Kenneth. What was the one event or change that you experienced or observed that has made you realize that technology was disrupting the world of finance?
Yeah, so I think this topic is quite interesting because we were following it for the longest time. And I think back then in 2016, 2017, there was this big hoolah by MAS in Singapore that actually said that they were going to launch the open API projects and really try to think about finance in a new way. And we are definitely not the first in the world to think of this, right? In the US and the EU, you see a lot more things which have progressed way further, be it in terms of P2P lending, robo-advisory, wealth management. I think we take a lot of reference from US and Europe, and recently now China as well. So honestly speaking, you can actually see a lot of improvements and changes because they are all starting to put the users first. So I think as a consumer, I see it, and I think as Sidley as well, because we cover and we actually see a lot of discussions about fintech and financial tech in general. There are definitely a lot of interesting things happening. Yeah.
Okay, thanks, Kenneth. It is very insightful. So how did you experience this, Arvin, that moment of realization?
It's very similar type of experience, actually, especially living in Singapore the last part of my life. So it was probably 2015 when Startup Bootcamp Fintech kicked off in Singapore and started to run their accelerator program. And actually late 2014, I got involved with them and started to mentor at that program in early 15 and started to get to know some of the startups, the early batches as well, folks like 10X and these types of companies that first came through and were really looking to disrupt the traditional players and bring technology into the world of finance in a big way. I think that was a real spark for us, both myself and Stuart, actually, our co-founder as well. Him and I spent a lot of time mentoring those startups and spending time with them. And it was all across the board of finance. They were payments companies, investment, wealth management, insurance, compliance, lending companies, ID, authentication type of businesses popping up as well. So I think starting to see that all across the value chain, technology companies were popping up to either support financial institutions or potentially disrupt some of the things that were already in play was definitely an eye-opening moment for me.
Thanks for sharing your experience, Arvin. Swapnil, you're probably the oldest panelist and have been in banking for 2 decades. When did you observe the arrival of change?
Thank you so much for reminding me about that. But yeah, so I guess in my case, I can tell you that one thing that happens if you are working in a bank. So I've worked in banks for nearly 2 decades, and there is this comfort zone that you're in, and sometimes you're just following. You're looking at the news around you, and you somehow believe that this is not going to happen, and things are going to be fine, and so you're observing it, but the sense of urgency to do something around it doesn't happen. And personally for me, I think last year it happened, and that was the moment where, I don't know if anybody remembers, but Thomas Cook, which is the travel agency and a large corporation, it just shut shop basically. And I still remember standing and reading that news on Bloomberg, and I was like, like we come to office every day and we feel so secure, but really, if I take a 10-year view forward, is this the way we are going to run this wealth management industry? And I we all know that it's not going to happen in the same way. We may not know yet what is the right way that will evolve out of these all the experiments that we are doing, but it definitely is not going to be the same way. That to me was that moment where I said, you know what, it's time to make that change. And then I started with Kristal. In terms of the company itself, I know Ashish, who's the founder, has said this in many discussions, but for him, starting Kristal.AI was more out of being denied access to the information, the products, the solution. Similar to the way, like if Kenneth is saying that people need to have access, and there is effort that goes into ensuring that people get this information and access. And it's just in case of Kristal, we took the wealth management or helping with investments as the problem statement, which the attempt was to solve. But yeah, so that's kind of the moment how I decided with Kristal.AI.
Great, thanks for sharing to Swapnil. So Daniel, you are the youngest, amongst us, I believe, and probably still experiencing change the most. Did you have such a moment of realization?
I think coming from a venture capital point of view, we have seen like a large amount of funding in fintech industry, especially more recently. So be it, digital banks, trading, lending, personal finance. So more and more players are emerging, and many of them are capturing like the interest of these big venture capitalists. And in certain verticals, you have seen increase in funding, maybe 2-3 times since 2019 to 2020. And maybe something more personal is that, especially during this pandemic, I have actually seen the acceleration of contactless payments, smart contracts, especially in the world of maybe crypto and blockchain. So seeing many big mainstream players adopting this, I think personally it has really opened my eyes up to how actually all this new technology can actually maybe even potentially create a new financial system. Yeah.
Thank you all for sharing your personal journey. Let's take a moment to do a quick poll here with our audience. So, let me get started. So everyone, you should be able to see the poll, and we would like to have your votes. Let us know, based on your understanding of the finance industry, which of the following would you prefer to work in? Would it be the fintech companies or the traditional financial institutions? Let's give it a few more seconds for everyone to finish voting.
Can they choose both? As in, like, is it a either or?
I think it's an either or. Like after you finish voting, then that's it. And I'll share the results with everyone after that.
Cool.
So I think
like Swapnil has been to both, right?
Yes.
Like he has been, a large chunk of his career has been in traditional finance and now fintech.
I'm sure today he has a preference at this point.
So Swapnil, which one do you have a stronger preference in now that you've been through both sides?
No, I think it's about keeping with the times, and that's the whole, right? It's like there was a point of time where everyone owned a horse and they had a horse carriage, and then the car arrived. So, and then you had to shift and say, okay, automobile is the future.
Okay. There are like 3 more audience. Would the 3 more like to finish? Give your vote to us, or we'll just end the poll in 3 seconds.
Actually, I'm curious for Arvin as well. Like, is Visa considered a fintech company, or is it a traditional financial?
That's a really good question. I mean, within Visa, when I was there, and I don't speak on behalf of Visa anymore. The view was, yes, it's the original fintech, the OG of fintech, right? Because it was this technology platform that enabled financial institutions to connect with customers and do so on a global basis, using really technology that was available at the time. These days, I think Visa's done a good job, at least from my experience and what I had gone through there, of partnering with the right fintechs while still maintaining that balance. I think to Swapnil's point, it's keeping up with the times of understanding where is technology going, who to partner with, what are the right fintechs. And I think in general, a lot of the platform players like Visa or MasterCard have done that really effectively.
Thanks everyone for giving your vote. We have the results now. So 73% actually would choose to work in the fintech companies, whereas like 27 of them would prefer, to stick to the banks and non-financial institutions. Quite an interesting result. So Arvin, maybe you could tell us more about how Hula is using technology to influence the traditional business model in your space.
No worries. Well, one quick comment on that result. I was just saying that we're hiring a lot. So if that's the outcome of that result, then please do check out our LinkedIn page, because there is a lot going on. In terms of disrupting, it's interesting because I think it's new in the sense that we're delivering value to a customer segment that's generally underserved at this point. A lot of our customers are using debit cards to engage with Hula and make their purchases, and spreading out that transaction over time. And generally speaking, they're a lot more comfortable doing that because they feel that they're spending money that's essentially in their bank account rather than using a credit product. Now, there are traditional installment solutions in the market today And generally my view, and I think the team, when we look at this, is it doesn't need to be a competitive position. Actually, a lot of the times a traditional installment solution from say a financial institution, a bank, is solving a different problem. It's not solving a short-term, small ticket issue. It's, you want to spend $5,000-$10,000 remodeling your home. A bank solution might be the right solution for you. And we have no issues when we talk to our retail partners to have that discussion, broach the hard topic and say, listen, the best bet for you is probably to have multiple options available to your customers so that you're addressing your full breadth of customers. And there are going to be groups of consumer segments that prefer Hula. There might be some that are looking to solve a slightly different pain point, and they will choose a more traditional method. Now, where I think we are in a unique position is that we are solving a pain point, again, for a segment that was probably under addressed or completely unaddressed previously, especially as we go into new markets, Malaysia and Hong Kong that we've launched in. There are new segments of customers that really had no alternative solution, and now we're starting to address that with them as well. So I think that's where the view is on some of the maybe competitive but more complementary approach that we have to the traditional players.
Thanks, Arvin, for introducing how Hula is making a change in this technology and finance era. So Kenneth, we all know Seedly very well, but before Seedly, there have been other financial product comparison platforms. So how is Seedly leveraging on tech for its rapid growth?
Yeah, and I guess thanks again if you've written a review, if you've written a question and answer, if you've read one of our articles. I think you're partaking in a community activity. So to your point, that's exactly how we plan to grow the platform. So the way that we feel that finance should evolve is that it needs to be ground up instead of top down. So I think it's interesting how you guys polled as well, because traditional companies like the banks and the insurers, they normally think that they know all the answers. They will tell you that you need to get insurance A, you need to get fund manager A, fund manager B. But actually, the real people on the streets, right? The ones who are actually users and consumers, they also really know what is best for others. So we want to sort of gather those feedback and the advice from the community and help to elevate it to a level where other people are able to see real reviews, real feedback, real questions, real answers. And yeah, that's how we leverage technology. But at the end of the day, it's about people.
Yeah. This makes a lot of sense, really, because very often when we are thinking of what should the first insurance to buy, instead of going to an agent, we usually go for friends, family, kind of.
Yeah, exactly.
So now is Kristal is in the crowded space of robo-advisory, and how do you see Kristal using tech in wealth management? Probably the least disrupted sector in the finance.
Yeah. No, that's true. So I guess in terms of finance, in a traditional sense, of course, payments has been probably the first segment where technology has come and disrupted. But I must say that, like what Arvin mentioned in terms of the collaboration or the coexistence of different entities solving different parts of the problem. And I must admit, what Kenneth was saying around, there's a sense of humility in the entire problem solving approach. And I think that aspect of saying that we are all trying to collectively work and learn. And so for example, on our platform, we've started showing things like what is trending, what kind of ranking tools we want to use, using algorithms to guide us in the process. And essentially, moving away from this thing that, if I am the CIO of this company, I know the best and I know the right answer and everyone has to follow. So it's not like dictating and saying that, as an investor that you should be doing this. It's more a process of let's collectively learn, let's identify things which are going to improve that entire solution and give you more choices, right? And that's the other challenge which is there. And in a way, I can right now think of just these three companies over here. All of them are in different segments of solving it, but they're all basically expanding the set of choices for investors. And I would say with Kristal, we are trying to do exactly that in the wealth management space, and hopefully make the journey less bumpy, or at least more satisfying when you go around looking for an answer as to where do you put your first $1,000 of investments, or $5,000 that you want to save.
Sorry, Chris. Sorry, Sonia. I think we're losing you for a bit. Sorry. Yes. Sorry, I think we lost you for the past 10 seconds.
So I was just saying that people have goals and dreams, and the idea is to help in achieving those in whatever way possible, by using, moving away from dependence on human beings for the entire process, and taking the assistance of technology to improve the choices and decision making. So in terms of portfolio selection, for example, we like using algorithm to guide us because it's objective. It doesn't have any product bias, and and it can process a lot of data, which is difficult for one person to do.
Thanks for sharing, Sunil. So now to Daniel, as an undergraduate, you are actively searching for learning opportunities and exploring your interests. So would you say that your desired job or opportunities available to you has changed due to the increasing relevance of tech in finance?
So yes, definitely. I think, as an undergraduate who hopes to break into the finance industry, I think simply doing well in school is not enough. So I think maybe, some of our desired jobs might not have changed, but, many companies, including traditional ones, are embracing technology, and, they are coming out with more like requisites that, having basic knowledge in certain technological areas. So I think that's something that we have to prepare for. And, on the other hand, for those who, have actually more interest towards fintech or more technology-based jobs, I think, maybe it's generally more exciting for us because, we are born in this digital age and we are more savvy. So, and, I think maybe it's also a good option in terms of a long-term career, because I guess it's more relevant and more defensive for us to go in towards tech that is regarded as the future.
Thanks for sharing too, Daniel. So yes, I just want to urge all of our attendees, if you have any questions for any of our panelists here today, please feel free to ask. It could be from Kenneth about anything about Sidley, or from Arvin to learn anything about Hula and disrupting payments, all of that, including even for Swapnil and Daniel from their respective view. So question for all, especially after the onset of COVID-19, how do you see the growth of technology in your respective industries? So maybe we could start with Arvin. You can share some of your thoughts.
Sure. It's really interesting because we've set out to be an omni-channel business from day one. We wanted to be in physical retail and online, and bring those two places together and allow you to shop where you prefer to shop as a customer. Now, this year hit, and it was somewhat timely in the sense that when COVID really started to become obvious in, say, the February-March timeframe, we had just kicked off the project to build out an omni-channel solution. So prior to that, we had been largely e-commerce. So what that allowed us to do was really double down on the e-commerce position that we were in. And obviously over the last 8-9 months, both here and in Malaysia where we were live, we saw a massive growth over that period of time, driven by the growth in e-commerce that we saw as a result of the COVID situation. A lot more folks shifted or made their first transition, their first purchase. Even some of the conversations we were having with customers, it was really guiding somebody sometimes to their very, very first online order, which was really a great thing to be a part of as Hula. So that's where we saw a lot of the growth, driven from technology being adopted at a rate that was much faster than previously anticipated. And now, at least in the Singapore situation, as stores start to open and we've now launched the omnichannel solution, we were starting to see a bit more of that spread of orders in the in-store and in the online space. And again, I think it's back to that original plan that we had, which was to always be omnichannel. And even as we've launched the Hong Kong market, it wasn't let's launch Hong Kong e-commerce, then in store. It was no, let's launch Hong Kong. It's going to be across both channels, and it's going to be all tied together in a single launch.
Thank you. How about Kenneth, your experience, with the growth of technology for Sydney?
Yeah, so I think earlier you guys talked about like the COVID situation. I think likewise for us during this year, we actually saw an increase in digital like awareness of finance. So people actually searched a lot about investments, they searched about stocks. When the whole markets were crashing, the discussions of US-China trade war went up. People started opening up brokerages like no tomorrow. I think at Kristal, you guys probably got a lot more users as well, people who started trading and investing. So then there was a lot of unpacking to do from a personal finance literacy standpoint. So I think that's how we sort of went through the whole period. Yeah.
Thank you.
Actually, I'm curious. A question to Arvin as well. Like you mentioned that you guys help people spend later and stuff. How do you ensure that they do it responsibly? Because I saw on a Fintech podcast recently as well, to your point on delaying payments, right? Like how are you guys educating the consumer?
Yeah, I mean, I think there's a couple different ways of going about this. A lot of it has to happen at the top of the funnel and around education. I think, if I'm honest, I mean, part of the reason we've reached out to you and your team is to do some of that, is to teach folks how to use Hula the right way. And to use it in that responsible manner, whether that's through the right content, the right education, the way we do customer support. Because a lot of the times folks will contact us first to really understand the solution. Because in this market, it is very much new across Southeast Asia and largely across Asia Pacific. Buy now, pay later solution is still quite new. So, a lot of that is the upfront education, how we position the business and how we communicate to customers that, we will say no sometimes. We will decline an order. And as you stack orders, especially, we will get to the point where we will say no. And doing that in an effective, customer-friendly manner is really difficult, especially as you're scaling a business, you're growing rapidly, and you're essentially saying no to growth figures, right? You're really saying, I'm sorry, but the responsible thing for us to do right now is allow you to go through the process of paying off this installment first, make these next 2 payments, and then you can purchase more. So it is a painful thing when you're managing P&L and looking at this, and then at the same time saying, listen, you know what, we're making an investment here into the long-term education, the long-term responsible usage, and I think building trust with our customers as well, that we're not trying to get them to do something that's detrimental to their daily life as well.
Thank you. As for yourself, you are, so like for example, Daniel, you're in the you're still in school and then you're representing the clubs, and how do you see that from around you if technology is expediting any kind of growth in the capital firms?
Okay, so because we are very focused on venture capital, I think most venture capital firms are looking for companies with strong growth potential and scale. So technology is definitely one that meets all these criteria. And with the onset of COVID-19, I think it actually creates an opportunity for maybe all these tech startups to solve many gaps and problems that have risen during this pandemic. And I definitely, think that this trend of funding and investing more and more in tech in the VC scene will continue to rise as they, solve more problems for everyone around and everything around. Yeah.
Thank you. And for yourself, Swapnil, I think there is also a very relevant question from one of our audience, which is, given that Kristal's main target are the high net worth individuals, and how do you see, taking over the current market share of high net worth individuals whose wealth are currently managed by the traditional wealth managers in banks? Yeah.
So I guess fundamentally, we are going to be able to do that with the help of, young, graduates or postgraduates or, youngsters who have that, inclination to use technology for delivering service and solutions, also have the ability to keep the client's interest first. I think that these traits are going to be a big contributor. See, from a product perspective, pretty much all products are available everywhere. So in most cases, products are getting commoditized, right? It's the same ETF, it's the same stock, it's the same thing. It's just that how you deliver that entire service. From a monetization, and that's a very specific question. So for us, from a monetization point of view, we have pretty much inverted the entire pricing structure. So in most banks, if you have small amounts of investments, then you are priced more. So you are overcharged if you're a small client. And as you become bigger and bigger, your ability to negotiate and improve your pricing increases. For us, we have kind of flipped it around and said that if it's somebody who's starting the investor journey, we don't want to really go after making the most money out of a client who is giving us less assets. We would rather go for fees where there is somebody who's giving us more money. So for us, in a way, high net worth individuals are the one where we deliver more customization or more at a very product level solutions that are offered. That kind of justifies demanding that kind of fees. And even at that stage, because we're using technology, the cost of delivery is much lower, and still we are lower cost compared to a traditional bank or a traditional wealth manager. So here, really the game changer is the use of technology, because otherwise your cost of doing business is very high. So for us, the monetization will happen through the access to these kind of products.
Thank you, all panelists, for sharing your views on the growth of technology in the respective industry. So for people who are interested in moving or staying in the finance sector for the long term, what kind of skill sets would you recommend them to pick up to stay relevant? And maybe Kenneth, you could take this first, given you review all of these finance companies, maybe you have spotted some patterns there.
Sorry, the question was around what skills?
Correct. Yeah. Like for people who are interested in either getting into or staying in, finance, which are the skill sets you feel would be relevant for them to stay relevant?
Sure. I guess if you're a software engineer, you're wanted everywhere. I'm sure everyone will want you. So that's a good start. If you have some form of software engineering or data skills, data analysis, generally speaking, any of these areas will be highly valued. If not, if you're in finance like myself, it's okay. I guess marketing, digital, like all these skills are definitely useful to help understand the online landscape and yeah, any of those skills. So if you can do Google Analytics courses online, go and get certified at understanding what is Google Analytics GA, and the basic analytics stuff. I think those will definitely help no matter where you go.
Thank you, Kenneth. How about from your end, Arvin?
Yeah, listen, I mean, the data is spot on, regardless of what role it is, whether it's in marketing or in product, regardless of where we're hiring these days, it generally is data-driven first in terms of the mindset on decision-making within those functions. And then the other set of the skill sets that need to come through for that specific role. So of course, yes, understanding the data aspect and then applying that to your function is going to be really important. I think in general, though, if you're looking at a long-term career path in any industry, you've got to really care. I mean, you really need to be interested in that industry. You've got to have some passion for it. You've got to be curious about it, because especially, I think, I've been in payments for 8-ish years now. And generally, I don't think I would have started building a payments company if I hadn't spent time understanding payments, being interested in it, being curious about where the gaps were, understanding where potential opportunities to build a business could be as well. So if it is an industry you want to be in, make sure you really enjoy it as well, and make it a little personal so that you can keep that curiosity and keep yourself learning continuously.
Thank you. What about views from you, Swapnil? I think you made the switch from a traditional bank to Kristal, and which were the skills you felt was necessary for you?
Yes, I think business has become so tough in the banks, and it's, I don't think it's the fault of the banks. It's just that this is the way the industry is moving. That keeping the client's interests on the table along with the firm's interest is a big challenge. And I think what Arvin said resonates very well. in terms of just the care, right? You do care about the client, and that care is what gets demonstrated. And it also kind of energizes the entire process of creating the product or the solution, because there is, it's not easy. I mean, even though technology is there, just harnessing that power is it's quite difficult. In terms of skills, I must say that it has been an amazing and a very interesting journey for me, because in the last, I would say, 6 to 8 months, I have interviewed so many people because we have been growing. And of course, because I came from a bank, my natural reaction was that, okay, let me go and look at a bank for hiring relationship managers, advisors. And now I have reached a point where, we were interviewing a few advisors, and these, investment advisors, because they need to have product knowledge. And we shortlisted 2, 3 of them. And then finally, one of them said that, apart from providing investment advice or knowledge, product knowledge, he also knew video editing as a skill set. And I was like, you know what, if you know video editing, this is this is giving you that extra edge. So I would say in today's day and age, the hiring decision also is now looking at a broad spectrum of skills, and they can cut across, right? So you can have somebody who knows how to use editing tools, software programming. Somebody knows Python. Somebody can create a quick model and solve a problem. So it's not just product knowledge, because that's everyone has that. So a diverse set of skills is something that I think is definitely going to help in kind of increasing the chances with the younger firms, because most people in these kind of firms, fintechs or firms, are doing multiple things. You're not just doing one function, right? You're doing 2, 3 things.
So true. If I can just comment on that, I completely agree, especially as we're doing early stage hiring, right? Folks were wearing a lot of hats. But the interesting thing of that point that you raised on a multi-skilled person getting the edge is you're also kind of confident that things are going to change and evolve, and that person's likely going to be capable of changing and evolving with it at the same time, because they've shown it before. They have a track record of being multi-skilled, multi-talented, and able to pick up new things. So it definitely helps as you kind of look at, okay, who's going to be able to kind of grow with the business as well.
Yeah, it's really good point from Arvin, and thanks for sharing Swapnil. So, next one I'd like to ask from, all panelists, which is the entry barrier for finance, fintech is low. So this is evident in the rows of stores at the Singapore Fintech Festival, where there are 5 or more fintechs at each aspect of finance. So is there a risk that it will be overcrowded and burnout? Which, feel free to share your views. Maybe even Daniel, from your point of view, as a student.
Okay, so maybe I think from a venture capital point of view, definitely I have gone through many fintech startups, and I think there are possibly too many out there, and I think they're all trying to solve different problems lah. So I think looking out, at their business model and what is their value proposition is very important, and I think the better companies are getting it right, and they are the ones who are actually getting funding. So normally the venture capital firms, you can actually see their effectiveness in terms of the funding and how far they actually go. So I think it's like natural selection. The better ones will actually succeed, even though there are many, like you said, the barrier entries are very low. Yeah.
Thank you, Daniel. So, Swapnil, would you have your views on this?
Actually, the entry barrier thing is a very valid thing. Like today, anybody can just set up a website, create an app, and get going, right? So hitting the road with a business is not easy. I mean, it's quite easy because the entry barrier is not there. But I think sustaining it, growing it, ability to monetize, all of those kind of things are going to be, they require a lot more than just getting started. And hopefully through that process, while there may be some consolidation, so you may have 2, 3 firms combining, we've seen it even in the wealth management space, we have seen some acquisitions and mergers happening in the last just 1 year alone. But I think it will still keep that innovation going, because there'll always be, entrepreneurs who will come in and try to set up something new, even though it's crowded. So I don't think it's going to deter people from trying out.
Thank you, Swapnil. And for Kenneth, what are your views on this?
Yeah, so I think with regards to entry barriers, I would say it's definitely higher than like e-commerce. So it depends, like when you share low, depends how, like what's the benchmark. Because for example, like I think it's easy to set up a Shopify, but I think for finance itself, I would say it's easy to set up a blog or like a financial site, which is maybe you can talk about your investments. But I would say like to actually launch a product and a tech driven company that could scale, it could still be quite hard beyond like a Series B or Series C level. But I think Series A, maybe there are still a good amount of companies trying to do, maybe 5 companies who try and solve one problem alone. I mean, just in the robo-advisor space, there are, based on Seedly reviews, I think there's like eight robo-advisors, and now Grab has entered the picture as well. So now it's very interesting. You have the small guys, you have the mid-sized guys, and you have the big guys. They're all trying to capture the same pie. So yeah, I think very interesting. And I think to Daniel's point, it's really natural selection. But as with all things in life, it's about natural selection.
Yeah. Thank you. And for Arvin?
It's interesting. I mean, it's not a bad thing, no, because Grab had to acquire to get into robo-advisory.
Yeah.
So at least there's a win for the fintech community as a result of that. But echoing some of what Kenneth said, building a deep tech business, regardless of what industry you're looking to disrupt, is going to require some pretty heavy engineering, and that's not something that's easily replicable. Now, there are definitely business model, interesting business model innovation that could happen on top of your business, which is always, a place to be watching out for. But especially in this segment, there tends to be adherence to some sort of regulatory body or something that you need to fall into. That tends to rack up compliance and legal costs to be able to do so. And there's a certain point, I guess, that you have to be able to hit to keep up with that, especially if I'm honest, if you want to build a business that's Asia-wide, and I mean, I say that broadly, not Southeast Asia, even as we go into 3 markets, I can see it stacking up more and more in terms of the amount of work from a compliance and legal standpoint to be able to scale into those markets. But that also creates some defensibility at the same time for our business.
Yep. Thank you, Arvin, as well. All panelists for sharing your experiences and insights. Now, I hope this discussion has allowed the audience to obtain a better understanding on how technology will change the finance space. So I'd just like to take some time to address any questions that our audience have for the panelists, which right now I see that we have 3. So, first maybe for Kristal, something I hope you can share with this. We have an India. Do you think there is a huge potential for scaling business further in India and the region?
Yeah. I'll take a quick stab at one of the questions, which was on, somebody's asked whether the choice between a bank versus a fintech depends on the nature of the product. I do agree. And I think this is relevant for all businesses over here. So whether you want to, if you're talking about getting a, finance because you're buying something, whether you want to see use somebody as a sounding board, I think what needs to happen for people who are not using fintech is developing that habit of slowly considering the fintech players as one of the places that you can find an answer. So if I was considering that, I'm thinking about getting a product or going for I'm looking for opening a bank account or, finding a financial product or an answer, I can ask a friend, but I can also go to Seedly website and look for the reviews. Now, looking at the Seedly website is a new habit that has to be formed, because traditionally we were not doing that. Like I was not doing that, but now it becomes a natural thing. So I think it will not be about product A versus product B. It's just expanding the set and including some of the, the fintech names to check out what's happening, because that's how this entire space and the trust will build. There's one question on the changing landscape and what kind of products. I mean, definitely we've seen, things like Bitcoin, crypto has become like, I don't know, Kenneth, is that something which is asked? Like actually, Kenneth would be the right person to forecast which product will be in rage. I think you should answer this one.
I guess on this question, there's this thing which I highly recommend everyone on the call to sort of understand, which is called this Gartner hype cycle. So you guys can check it out. It's GARTNER, Gartner hype cycle. It's a consultancy census kind of firm that goes around figuring out, is it hype or is it reality? So I think just 2-3 years ago, you would have realized that Bitcoin was all the hype. But then after that, after the whole ICO blew up, right? Everything just crashed and people were like, this is a fraud, this is a scam. But now if you're looking at it closely, actually the real applications are coming up. And I think this whole idea about DeFi, which is decentralized finance, I wrote an article about it recently. Very interesting space. It's beyond Bitcoin, it's blockchain, it's real stuff that has value and there's real applications that could disrupt the way that things have been. So it's very decentralized, it's no longer centralized finance. So I think that's one interesting one. You guys should check it out and figure out why decentralization for finance could change a lot of things.
Yeah, very interesting point of view. And, so Daniel or Arvin, would you like to, share your comments as well on the changing landscape for fintech?
Maybe, yeah, to Kenneth's point on DeFi, I think, yeah, it's very interesting. I have actually been reading about it as well. And I mean, it's very interesting how that, it's becoming more decentralized, more liberalized, and you can actually bypass the banks, the lawyers, and actually, having all these smart contracts and getting things done much faster and at a cheaper cost. So I think that's definitely something that people should read about. And yeah, I think it's really, it's creating somewhat of a new financial system as well.
I think just to give one example here, very interesting stuff is the area of P2P finance, P2P lending. If you think about it now, if you actually go and check out any P2P player, it's still centralized. So what happens is, let's say the 5 of us want to lend to other people, right? We still contribute money to the platform and then the platform distributes it to the other people who need the money. But decentralized is literally removing the central entity and it's just connecting individual open source kind of a model where you can directly connect from lender to borrower. So there isn't even a need for a central entity like a bank or funding societies or co-assets or whoever in the center. Yeah, that's basically what DeFi is.
And, Arvin, how about, your views on this?
Well, I'm probably a little biased because I'm going to say buy now, pay later as a segment is going to be the way to go. But it's interesting as Daniel was speaking, I think what popped into my head was like, it sounded more like what are the problems that he's looking at as a consumer to be solved, right? And I think a couple of years ago, to Kenneth's point, we had some technology. We were talking very, very much about the technology rather than the applications. I think now we're at a point again where it's, okay, let's not try to jam technology into something, but let's think about the problems that we need to solve and use the appropriate technology. When we kicked off, a lot of people actually asked us, did Hula build their platform using blockchain? And I was like, what if we did? What if we didn't, right? Are we solving a pain point for our consumers and our merchants? And that's what really it came back to, which I'll be honest, like a couple of years ago, it was hard to get out of conversations about blockchain as well. So, but that was a de facto answer for all of us within the business, whether it was myself, the CTO, or whoever else in the company. We refused to talk about how or what technology platform we were using. It was all about the problems that we were going to solve for our customers.
Thank you. So there's, one more question from the audience, which is, with contraction in Singapore, US, India, and there seems to be a bashing of China all around, creating barriers of investments, which geography will lead to fintech? Arvin, would you like to take this?
This is a super loaded question. I'm not sure that just China is being bashed. I think, it's on a global basis, there seems to be a lot more nationalistic sentiment in general. occurring all over the place. And I think where we are right now is just, and this probably gets echoed a lot when I listen to Singapore's PM speak, right? We want to keep that open economy happening, keep trade happening, cross-border, keep all of these good things happening. Now, one of the early points Kenneth made was around the investments that the MAS made into Singapore as this kind of tech development, R&D, innovation type of hub. And now we're starting to see some of that come to fruition. And I think as we start to get some exits happening out of this market and out of the Southeast Asia in general, we're going to start to see a lot more reinvestments into early stage startups. I think a couple bigger exits, whether that's hopefully a Carousel or one of those types of businesses that are quite large at this point, is definitely going to feed back into this cycle. And between myself and a few other co-founders out there of other startups, that's kind of what we're craving. We want to see more wins from this region. So I think it's less about, a US or China-centric view, but more so we're here, we're in this region, we want to build big businesses that are successful. We want to see those outcomes as well. I think more from Singapore's standpoint, it's always been a bit of, will a company establish a HQ here or in Hong Kong, for example? At this point, it seems like Singapore is definitely having a lot of success as that hub for the region with fintech companies.
I'll add to that. I mean, in terms of, I think the demographics in this part of the world, and I think over here the winner is not just about who has the best, who will lead the fintech just on technology, but who can really impact the lives, right? Because a lot of these things are linked with financial inclusion, financial literacy, access to things. There are people who may never have had access to a bank account or a platform, and suddenly fintech is actually changing lives. And we have the demographics in case of even, and that links to one of the other questions, which is on India. I mean, there is population. We have this thing with Indonesia, we have it in China, where the demographics are going to support at least the demand and problem solving, which is going to help break down these barriers that may potentially come. I mean, in case of Kristal itself, we have a broking license in India, but in India we're still taking small steps because the opportunity is huge. So if you're going to do something, you have to do it really big. Otherwise, you can get lost in a huge place. But yeah, so I think the contraction is going to be mitigated by the demographics in these parts.
Thank you. And Kenneth or Daniel, would you have anything to add to this question? Okay.
Nope.
So we have one more coming in, which is we can see increasing geopolitical instability and climate change shaping the future going forward. How does this affect the fintech landscape and the future of impact investing in Southeast Asia?
This is an interesting one. Maybe I'll take a shot at this. So 1 year ago, I was at DBS's AGM. So if you guys have been to AGMs, it's usually people eating buffet, old uncles and aunties queuing up at the buffet line, having food and asking really hard questions to DBS's CEO, Piyush Gupta. So actually the question that was asked to him was actually with regards to a project in Indonesia, which they were funding as lenders. And it was severely like chopping down trees and really doing a lot of deforestation in Indonesia. So it was a really hard question. You could really tell that he had trouble answering it, and he had to get his advisors on the left and right of him, whisper to him some ways to answer it politically right, because it definitely is a good business for DBS, but whether it's an ecological or climate friendly business is another question. So it definitely is impacting the way not only fintechs but banks and companies in general think. So I don't think it's just a fintech specific problem. It's just an industry-wide thing. Everything that we do, we have to think of how do we be socially responsible as well in anything, right? So it's not just about climate change. Yeah, and I think that DBS example really highlighted how even as a bank CEO that is a billion-dollar, multi-billion-dollar company has problems answering, it's a thing. Yeah.
Thank you, Kenneth. And Arvin or Swapnil, anything on your side?
Yeah, absolutely. This is something which cannot be ignored. You're big, you're small, it doesn't matter. It is something which, you know, and this is something which the older generation will have to adapt to this more than the younger ones. So I can imagine for Daniel, this is just, this is the way life is. Thinking about sustainability and impact is default position. It's the others who have to change and adapt and say, no, wait a second, I need to think about how things will continue for the next 20 years and not just think about what's going to happen to me because I am 55 and I have, I've lived a large part of my life, so I don't need to care. And that change will have to be done. And very apt example that Kenneth has given. There is no choice.
Thank you, Swapnil. And Daniel, yourself?
Yeah, so I think, as for me now, it's also like so-called the interview season, and I've been applying for many jobs as well. And I could actually see that, when I'm doing my research on the company that I actually want to get an internship at, I think many of them are very strong focus. I think actually all of them have actually mentioned that they're moving towards ESG, towards climate change. I think it's very common, and even maybe in the venture capital space, there's even a fund, I think from Tribe Ventures that is purely based on impact investing. So I think there's really a large shift and concentration towards this area, as I can witness myself.
Thank you, Daniel. Arvin, anything from your end?
No, I think it's fairly well covered from the other folks, and I think I'm probably more in line with where Swapnil is in terms of a little shift of mind and having this top of mind on a more consistent basis is super important at this point for everybody. Yeah.
Okay, thank you. I guess due to time constraint, we're going to have our last question from this audience. With Google coming with Google Pay, Amazon with Amazon Pay, and Alipay and Apple Pay. So does small payment gateways have a chance? In India with UPI, it basically clean up payment patent. What do you think will be the future of small payment gateways? Please speak. I think, Arvin, would you like to take this? Sorry,
yeah, no worries. Interesting. I'm not sure if I want to speculate too much on where that leads to, but I think looking at the future, we talked a little bit about consolidation already and the impact that that's going to have across the fintech space in general. I think inevitably that's going to be the case for some of this as well. From too many folks in a sector in that way, but again, probably Kenneth has a view more in terms of the comparative perspective across the landscape, right?
I can share from a Singapore point of view, but I'm not very sure about the India UPI. So in Singapore's case, they did this SGQR thing. So I can share an example that MAS had pushed for. So I think one good thing about Singapore, or good or bad thing, is that our government is extremely hands-on when it comes to implementation of such technology and regulation. So I think they didn't like what they were seeing with multiple silos being built. There was, I think, GrabPay, and then you had NetsQR, you had FOMO Pay, Liquid Pay, Everything Pay, Faith Pay. And then along the way, they realized that this is not sustainable. We definitely need to consolidate. And the way they did it was to have a centralized QR. So I think to Arvin's point, consolidation definitely will happen. And ultimately, it's who can not only acquire users, but give them enough reason to use. Because, for example, you mentioned Google Pay. I have it in my phone because I had a $5 referral bonus from a friend, but I've not touched it since a few months. But GrabPay, I use it every day because there's a rewards mechanism. I have stored value in my GrabPay. And yeah, so I would say, like, it's not only about acquiring the user, which usually is very expensive, but it's also about how do you retain the user and keep them coming back to your payment system.
Yeah, it's a really good point. I mean, looking at some of the examples, just to clarify a little bit though, I mean, stuff like Amazon Pay and Google Pay still run, I mean, Apple Pay as well, still run over a traditional payment gateway. And And even for ourselves, if you think of Hula as a solution that could be plugged into a payment gateway, we still look at, a traditional, say, whether it's a Stripe or an Adyen or these types of companies that are distribution partners potentially for our solution as well. So even, selling Alipay years ago as a solution, it was never a standalone. I would be selling that along with, 10 other types of payment methods based on which country you were trying to sell into as an e-commerce platform. So I think a lot of times it is about building up within your market as well. Now, when there is a centralized body that creates a situation where competition is tough, that is going to be a pretty big challenge, though, to sustain that business.
All right. Thank you, everyone, both to the panelists and our audience for joining us for this discussion this evening. So it's 9 p.m. So I guess we'll call it a wrap. Yeah. So with the other questions, if anyone has more questions, feel free to write in to support@Kristal.AI. For any questions for Sidley and Hula, we will direct you to Kenneth or Arvin. As well as Daniel for the SMU APAC. Thank you all.
Thank you so much.
Thank you. Feel free to reach out on LinkedIn if you guys have questions. Happy to answer. So, thank you.
Yeah.
Bye-bye.
We can set up a chat on Seedly. You can
you guys
it on
can.
the forum. There you go.
Yes, that'll be great. Take care, guys. Thank you.
Great.
Right.
Thank you.
Thank you.
Thank you.
Bye.